Speaking of SMEs, right, and engagement, financial inclusion.
Yes.
I know that's an area you're very passionate about, and I think some of the work you did with there was a UN special task force, I think that the UN Secretary General Antonio Guterres had appointed you to look at some issues around that. How do banks, central banks in particular, in this day of fast innovation around financial technology, strike that balance between getting more people into the formal financial net, banking services, and regulating or not over-regulating financial technology that actually then helps you push out financial services to last-mile consumers and communities?
Yeah. Okay, so there are two sets of questions there, and
yes.
I want to take them separately. First is your question about financial inclusion margin. It is an important outcome, and we need to expand financial inclusion. In Nigeria, this moment, it is like 63%. I seem to recall a number like that, 63%. So you could say there are almost 40% that are excluded. And that itself is a drag. There are maybe I think it's 1.8 billion people in the world that are excluded from the financial sector. And that is a huge drag, economic drag, in the sense that we could go much further if these people are included and they're using the financial services or financial sector for various operations, savings, transactions, etc. So I think it is important to see that that is an objective, but it is a developmental objective sort of in the, let's say, medium term. It won't happen tomorrow. Yeah. Now, the issue is we have to understand why however many people are excluded. And it isn't a one-size-fits-all problem. By the way, Kenya, at one point, this is in 2006, financial inclusion was at 27%. And now, well, maybe 2 years ago when the last survey was done, 3 years ago actually, it was at 83%. So significant improvement.
Yes.
So it can be done. And other countries have moved quite quickly. But one needs to understand why and therefore what is the solution. So there isn't any one solution for everything, cookie cutter approach.
Indeed.
One of the issues that we have seen, we asked ourselves, why is it at 83%? Why can't we just bring it to
100,
100, right?
Yes. Yeah.
And you begin to see that there are other issues that are harder to deal with. For instance, one of the issues we found was some of the young people hadn't got their national IDs. Yeah, so these are people who are in their 20s. And during COVID, that wasn't happening. So you could say they are adults, but they are therefore excluded because they cannot get their mobile devices, etc. It's still registered in their mother's name or their father's name or whatever else it is. So I'm making the point that that was one issue. Then the other things about women, for instance,
sure.
Maybe women don't also have the same challenge, right, of not being having ability to, well, for cultural reasons, they are not allowed or they don't have easy access to this sort of phones, etc. So there are other issues that need to be dealt with. Now, the central bank, of course, needs to support that, but it cannot do it by itself. And I think that is important. And you have to do it with the other partners in the place. Yeah. We, for instance, did it with the telcos because a major element of that was the mobile phone technology. Yes. Yeah. And we'll talk about the numbers in a minute. So I think the point here is to appreciate that the central bank, even as it was also a bit fashionable in Africa to talk about central banks pushing financial inclusion, to understand that they cannot do it by themselves. Why? Once they overdo it, it's like chasing two rabbits. Yeah, you won't get any of them.
Yes.
Yeah? So let them focus on inflation. In Nigeria, it's at 33%. I mean, if that is not a big job right there, if their terms of reference are not so clear with 33%, then I don't know what would make it more clear. So that's one answer to your question of financial. Now, central banks generally have been blamed for being anti-innovation. I think that's just a bad rep, It's not necessarily the case. What they should be concerned about is financial stability, and that these things don't create risks to financial stability. And so if they regulate the space, then the innovators can do whatever they want. The central bank doesn't know anymore. As a matter of fact, they don't know whatever that's a tool is being brought to them, etc. They don't have some sort of God-given knowledge. Yeah. So even on technology side, they know less than the innovator. But in terms of appreciating, they have to ask the right questions and appreciate that whatever they're going to regulate doesn't create this financial stability. And that's pretty much what it should be. And I think some of the, central bankers are weird people, I have to tell you. They are the only people that see risks. For instance, you may have, like today, it was a brilliant day. But you meet a central banker, at lunchtime and say, oh, it's such a nice day. And they say, yes, it is, but it may rain this afternoon. So they worry about risks.
Indeed.
And that is their business.
Yeah, and in quite a conservative approach, some would argue. But speaking of financial technology, you talked about mobile penetration. You talked about some of the other ecosystem players, if you like, that are bringing new products on. But you've also seen some central banks try and also pivot in some ways or diversify their role into some of these sectors. For instance, Nigerian Central Bank created a digital currency, the e-Naira, which hasn't quite caught on as they expected, but that at least shows that there is some thinking around innovation, and there's some thinking about how else they can solve the problem of financial inclusion. Is that a future? Do you see more central banks, African central banks, moving more in that direction? Or is it going to be more collaborative? So working with like an M-Pesa or working with some of the other fintech companies or mobile operators that are coming up?
I would actually say I don't have a
client.
I don't have a glass ball, glass ball to figure it out. But I think I see multiple channels.
Okay.
And we in Kenya succeeded in terms of improving the financial inclusion to that point, partly because, largely with the use of the technologies that the telcos put forward and all that. And today there is an elaborate ecosystem that has grown around that. Now, it's also true that in some other countries, some other jurisdictions around the world, they've had a hard time putting in similar, sort of like a cut and paste of that technology into their space. So the idiosyncrasies of the jurisdiction are very relevant.
Sure.
For instance, here, in Nigeria, a lot of the transactions are cash and debit cards.
Sure.
You don't have that many credit card transactions. If you think of South Africa, for instance, there's credit cards. That's really what is dominant. Yeah, and they don't have checks even.
Yes.
Yeah, I don't know about checks here. I think checks do work here.
Yeah, people use checks here
Still,
quite a bit. Yes.
Not in South Africa. In Kenya, we don't have. I mean, we use some checks. But not that much. By the way, the U.S., it's all checks.
Yes,
unfortunately, yeah?
Yeah.
You're still writing pieces of paper to your landlord, there's credit cards and things. So I'm just making the point that there's this distinction. In Kenya, everything is mobile. And so, for whatever reason, I think we could discuss some of the reasons if we have more time. Actually, it took off in Kenya. Today and now, for instance, I have made the point that in 8 years, 8 years, I never went to a commercial bank. Never did.
For any transaction?
Any
to do anything?
transactions.
It was all mobile or online?
Never online for me. Everything was mobile.
Yes.
I could do it. I could do all those transactions on, and from anywhere. Yeah. I mean, the U.S. I mean, Nigeria. I mean, I can actually make a transaction just now. You know, to whoever. You know, so I'm making the point that there are idiosyncrasies that are specific, and one is to. Now, as for the central bank digital currency, it's actually looking at a specific space. It's not the end-all and the solution for everything with regard to financial inclusion. And I have made this point in other places, even with my former, let's say, colleagues,
Yes.
Peers, you know, other governors, etc. And some of the things that we need to do, for instance, I gave this example as to why is it that we hit the limits of some of the financial inclusions because of things that have nothing to do with the financial sector.
Yeah.
I made that point. But still, it's not something that you can say will resolve all the issues. We know it has been, I mean, there are countries that are ahead of us, you know, in a sense, they've put in this central bank digital currencies, the Bahamas, for instance, the Eastern Caribbean region, the ECCU, Jamaica just recently started that. I may have forgotten one other country, and that's pretty much it. But I think you can also see that those countries have a certain character in terms of size, etc. I mean, that is not Nigeria.
Indeed.
Yeah. So I think there's something to be said about those things, and that's why one needs to examine things carefully and then roll them out. And one can say, are there other things that we can do that could accelerate the outcome?